Good morning, everybody. It's Friday, May 30th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you get any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here had, that looks like, give me a second. My July went off the board there. July corn up 3/4 at 447 3/4. July soybeans were down 4 3/4 at 1047. And July Chicago wheat was down a half at 533 and a half. This morning we had an export sales announcement of 210,560 metric tons of corn to unknown destinations. Of that total, 145,560 was for old crop, 65,000 was for new crop. Weekly export sales were also out here this morning. Corn kind of in line with expectations for old crop, 916,700. Lower end of the range for new crop, 31,000. Soybeans were disappointing, 146,000 old crop, 32,800 for new crop. Both were below, down at the lower end of the estimates there. For wheat, net cancellations on the old crop, 128,800. Solid on the new crop, 711,400. Good week for meal. 424,600 for old crop, 178,500 for new crop, well above the top end of the range for both of those years. And bean oil, 19,500 for the old crop, which was at the upper end of the range, and no sales reported on the new crop. Good morning, guys. We'll wrap up this week. I guess the overnight news, late afternoon news, tariffs back on. So we continue to play the game of guessing what's going to happen with tariffs and with the administration. They're certainly in the courts now, so we're beholden to what they come up with. We got good weather. And I think as we start this morning, also big story overnight with, again, the RINs and what the policy is going to be for the RFS program. Justin, maybe kind of break that down for us a little bit, just on kind of what we know on the surface and what the overriding outcomes could be depending on which direction some of that goes. So we'll have you kick it off and then throw it around the room.
Yeah, I don't think we know anything, to be honest with you. Just a lot of rumors, and soybean oil is so dependent on some of these policies, and so you get these headlines, these rumors that kind of swirl around, and you have these massive moves, and it's been happening. We've talked about on this show a lot. It's been happening for months and months and months. It's pretty frustrating because it affects us a lot. Our markets. You have anything from all these waivers that could be granted by Trump because he did it the first time, with small refinery waivers for hardships. It could be where they talked about maybe some of the bigger refineries have to take over those obligations for the smaller refineries. So it's just kind of a cluster, to your point, and it's kind of frustrating. Not kind of, it is. It's really frustrating because you don't know what you're playing with. You don't know what you're trading. So it's one of those things where soybean oil could be a 90 cent per pound item, double where it is today, or it could be 30. And it all depends on government, which is frustrating. It's kind of the other end of having all these, these things that are great for, using our products, can be used against you too if it goes the other way. So I don't know what to say there, to be honest with you. I think it's probably still a good value here. I think I still believe that there's the infrastructure and the money behind, biodiesel, renewable diesel, in general. So, you just have a lot of headline risk, just like a lot of these stocks that you see move, 20 or 30%, based on what the next headline is. Look at like Nvidia or Tesla or some of these really big tech stocks, right? They're so dependent on, what's the next statement going to be about, chips to China or anything like that. And I think soybean oil is kind of in that realm, in our markets. The other markets, corn, I've obviously been out most this week, kids graduation and sickness. So that's been fun, but it's actually been a good week for that, looking at these markets.
Mm-hmm.
I think the weather has just been too good. I mean, you guys did a good job talking about it. It's just on rallies, the weather's too good to get anybody excited, and the funds feel, the seasonal here going into June is that we generally top. It's hard for me without having the rally to call a top. To call a top on a break is tough for me mentally. But I think the weather's just been too good to get anybody excited, and I think there's too much unknowns about. You talked about it today, but like, are these tariffs on? Are they off? Supposedly there's these trade deals that are happening. We haven't had much talk about it lately, as far as like details, like what's actually happening here. And I think it's just kind of a cluster, and the market's it's kind of run by algorithms right now that are trading. I think there's just not interest by normal traders to be in these markets because you just don't know what to trade.
That was going to be my question. I mean, we're doing some damage here just in terms of volume. I mean, the funds obviously they're going to have their position and they're going to have an opinion and put their money where they're wanting to be placed, if you will. But to try to day trade or have an overriding opinion in this stuff, Justin, is it's virtually impossible.
Well, they just wear you down. I think the markets kind of make sense. Like it's not exciting, right? There's nothing concrete to trade here. I mean, Dustin talks about the real and some of these kind of bigger macro things, I think, that have an underlying tone. And we talk a lot about, government programs, meaning the farm bill, crop insurance. And I think those bigger underlying things still hold true. But when you have so much uncertainty, it takes participation out of the markets. And I think that's why it's so boring. And we're all just kind of sitting there like, what's going on? It's because what are you supposed to do here? You're kind of in no man's land. And I think that if you look at if you look at a corn chart, it's just like, beep, beep. And it's kind of like, it's about ready to flatline. It's just so boring. It's just kind of stuck here.
I got asked twice yesterday, Justin, is this a 185 start? In your opinion?
What you said for corn yield?
Yeah.
Is that what you're saying?
Yeah.
A 185 start. It's when our record's under 180, I think it's hard to say a 185 start.
Yeah.
I mean, we've had fantastic starts in several of the last years. I would say no.
Yeah. I
think this is kind of a normal start. And I think there's some problems. There's enough problems where I'd say it's normal. To be honest, it's going to matter what June, July, August brings.
Sure. But it had to be an above, but balance sheet wise, didn't it have to be an above average start?
Well, I think it couldn't be a below average start, Fair. I think it's, you cross that off as like, it wasn't a disaster, right? It was I'll call it a normal start. I mean, you look at the averages, it's normal. Some states were above, obviously some states are behind. Illinois was slightly behind for most of the time, so I mean, Iowa was ahead, the Northwest was ahead, but you're talking about Northwest. I mean, okay, like North Dakota, okay, great, it's 130 bushel average,
right?
It was ahead of normal. I think the biggest thing there is that prevent plant acres probably lower, right? So the bigger risk might be total acres might be up just because of that area that had such a good start. Yeah, I mean, it's one checklist of like, if you have to get to 180 plus yield, you have to have a good planting season, which we had. Is it a 185 start? I don't think so at all.
Yeah, no, it's really good.
It could be a 185 finish.
I'll ask that in a couple months.
Well, I think we've, a lot of these years we just had horrible finishes. Yeah. Especially like in Illinois, we just, stopped raining in August, for example. And we had lots of clients that were thinking 280, they do their work, scouting and it just it didn't fill to its full potential, so that's the key. You look at, 2014, 2004, the years that were cool and we had moisture all the way through grain fill. That's where you really packed on the bushels and got, the real high test weights. So you have to have a good August, September to really pack the bushels on. So we're quite a ways away from that. The market might be trading that, but we're quite a ways away from making that a reality.
Yeah, it would have been diabolical if we finished last year. If you think about it, I mean, from where we were shaped up to be.
Yeah.
Crazy. Dustin, what's on your mind here this morning?
I mean, just trying to figure out the headlines. I think Justin said it perfectly, right? It's like, we've got such uncertainty. Like, how are you going to force larger refineries to take over the burden of smaller refineries? I think anytime, all this uncertainty about, the renewable story, and the mandates as well. It's like anytime that we're looking at ambiguous headlines. I think maybe it's because given his previous first term track record, he handed out ethanol waivers like crazy. The idea would be that it's not going to let the market get too strong there, without giving relief, especially if it feels like a government burden. I think everyone kind of expects that there may be some sort of, deterioration of that market because of this. The other thing, I kind of noted this morning too, was Brazilian GDP numbers were strong, decent from expectations, and it's notable that a lot of the strength came from the bumper, soybean harvest, which I think has been a big part of why we've been running a little bit lower of a bean corn ratio this year than we have, in the last, modern history, the last 10 years, and not every year, obviously, but typically when markets are lower, we've seen higher ratios. And that's what's encouraged all these corn acres this year, 95 plus million corn acres. Fertilizer data seems to suggest that that's the case too. If we're only at 83.5 million bean acres, maybe that's all we need because Brazil grew such a large crop. But a quick swipe of the pen can change this narrative quite fast, whether that's on the renewable story or that's on, a Chinese trade deal, or just slightly unfavorable weather in August. We really are in need of a 52.5 national yield to get a sub 300 million bushel carryout at current demand projections. So there's not a lot of leeway for the market, and so we kind of think about that. I just think we don't want to take any strong decisions here. I would rather try to hedge more openly, still hedge with like insurance and maybe use options that still allow for some movement in the market. Right now, it feels like there's nothing, but we could be singing a very different tune 6 months from now. Like the market could flip 180 degrees with all the things that are going to come out in the next couple of months. So I don't want to take too strong of an opinion when we're in the dark right now. And it is frustrating, to Justin's point. So just my only moral to that story, I think, in my view, is try to keep things open, stay hedged, but stay fairly open.
Yeah, I think that's a great point, Dustin. I mean, it's one of the toughest parts of this career, right? The market wears you down, you're under cost of production, and time just kind of wears on you where you're like, it's going lower. I have to sell it, or I have to do this. And it's really hard to stay disciplined for us too. I think this is one of the tougher periods I've seen for a while, where you're just it's really hard to do anything here, and it could be right. I think the hardest part is realizing that if you sell it because you think it's going lower, it's in a lot of cases just a speculation as much as not selling it because it's going higher. Usually don't say that when it's hedging. When if you had no crop insurance, you had no farm bill stuff, then it's pretty obvious that, being unhedged is just a speculation that it's going higher. It's not the case this year. And that's makes it really tough. It's easy when, cattle's at all-time highs. Like now you're just, deciding how much money you want to take or how much money you want to risk. I'll let Ryland talk to that. But, if you had $6 corn, you're making, $300 an acre. Now you're just speculating on how much you want to make. But when you're in this no man's land, it's really, really tough. So
yeah, and I wanted to add to that too before we get to cattle. If we go back to 2020, this was kind of the same situation in 2020. Is you had years of low prices from trade war, And so there was a lot of pain. Like there was definitely a need for, you know, a big cash injection year. And when we hit COVID, I think everyone just kind of panicked a bit. We were in the lower threes for corn midsummer 2020. And we had all these things. We had Farm Bill, we had crop insurance, we had some hedges in place from early on in the year. And the push was, hey, if it's 330 corn today, it's going to be 280 corn by harvest because it's a good growing season so far, and I need to sell. Well, you know, not measuring these things is where the mistakes come in. The need for cash injection was there. We already had some support through Farm Bill, through crop insurance for many people at that point in time. And, you know, the thought of selling at 330 was appealing for a lot of people because it said, if it's going to go to 280, I'm going to need Farm Bill payments. I'm going to need a 330 sale. I'm going to need all these things. And when you just measured it, though, you were already making more money at 280 than you were at 370 in that situation for many, many growers because of the fact that many of these payments are double paid. Crop insurance is still paying as the market goes down. Farm Bill is paying more as the market goes down.
Well, and that was still a really tough time, Dustin, because even if you went through that, the mentality was like, well, it doesn't matter. We're not going to $4.
Right.
Like it was so like written in sand, like we're going lower. So like all those things make sense, but it doesn't matter. Right. And that was a hard mentality to fight.
Oh yeah. How many accumulators are written in, you know, summer 2020, because it's just, there's nothing that's going to pull this market up. And at the time it's like, you just couldn't have the imagination that China was going to start buying, or that we were going to have a deratio event, right? Or that the 2019 crop size was smaller than what they were really writing down. So many things that, like, whenever it's most dire, a lot of times the market flips, and that may or may not be the case this time around. I don't want to give some false hope here, but I can say that there is real pain out there right now. Like, it's an unsustainable price. We're talking about hundreds of dollars an acre loss projections right now for many growers. And, you know, I feel like Congress is behind the grower. I feel like the Trump administration is behind the grower. And if we go and do some things like to the speculative point of selling and say, well, it's just going lower for the year, I'm going to go sell 60% of my production, 70% of my production, and that it is going to be what it's going to be. That may end up being look like a genius decision, or it may be that you're the one person out of bounds where you get into a 5% or 10% yield cut and the market's back up at 550 corn. You're not getting the cash injection that's needed, and everybody else is. I just worry about, you know, overdoing hedging in this situation. I mean, you can always underdo it in this situation too, but I kind of want to ride with the ride with the crowd a little bit more than we normally would suggest to.
Well, I think too of like if you're willing to pay high inputs or high rent to plant the crop, knowing it's a loser, you know, and you're okay with that, like why would you be okay selling below that level? Like if you're taking that risk on already, why do it? I think that's kind of the attitude too, is like if you're, you know, you're already betting on big yields and higher prices to some degree if you're paying those kind of rents. So why lock yourself into the loss? Like why even do it?
Yeah.
That's kind of question I have, you know.
Right. And just big disclaimers here. We're normally not like this, right? We're normally trying to encourage hedging. You know, it's just that I think that there's you have to take the measurements of your other types of coverage into account. That's all.
Yeah. No, you guys have you've made that point very clear. We've done that for quite a while. Ever since we were making crop insurance decisions, we kind of saw or thought that this was going to be the case in terms of having to think outside the box. And
yeah, I mean, we've started the year off at a loss. I mean, for most growers, I mean,
Yep.
it just is what it is, right? So you're trying to figure out like what's the best way to navigate through this. It's not like we had, you know, really any chance. You know, I always say the market gives you at least one chance a year. So far, we haven't had it, you know, and maybe we won't. You know, it can certainly happen, but usually the market gives you at least one chance. You know, I think the market did give a lot of growers the chance for, like, you know, old crop corn, for example. You know, we had over $5 corn for, you know, a good chunk there after harvest with big yields. So the market did give a chance for old crop corn. So that did give you a chance. For new crop corn, we haven't had a chance yet, and maybe we don't, but that's the conundrum we're in.
Very good. We got a minute here. Rylan, Justin referenced livestock, and it's certainly been exciting. 7 consecutive weeks now with the higher cash trade, so we keep on trucking. And then I guess on the hog side, they're getting about as worn out from tariff talk as we are. So what put a wrap on it for us for the week?
Yeah, just huge cash trade. I mean, big basis right now. I think everybody is pretty excited here. I mean, it just, like Justin said, I mean, no one wants to sell it just to watch it go lower. I think at this point, there's real profit on the table. And, I think the big question mark is what's basis going to look like in 2 or 3 months. That's the real question mark. And I think anybody that sold it earlier, hedged it earlier is kind of celebrating this fact, right? I mean, it's helping boost that sale price, and it's rare that you get this kind of profit in the cattle market. So, I mean, I think everybody's trying to take full advantage. Nobody wants to breathe too hard on it, So, overall, it's just we're seeing prices just most people couldn't even dream of, and now we're starting to get pretty complacent with. We saw 221 to 223 in the south, 1 to 3 higher in the north, 368 to 370 dressed, even up 375. So I mean, we're talking $6 to $8 higher in the north. So I mean, margins are fantastic. Everybody's happy. And right now we're dealing with a supply that is just unbelievably tight. The Packers cut the kills back as much. I don't know if that's as much as they can, but pretty large degree here, 355,000 versus 471 last week. So no, it's still a strong market. I mean, typically we are in that time frame where it stays strong until about mid-June. I mean, seasonally, that's usually when you see any kind of real turnaround. But right now we're dealing with a real tight supply situation that there doesn't seem to be a clear way out of, aside from the Packer just cutting kills back, maybe trying to get some margin back on the table, trying whatever they can to get cheaper prices. They just can't. So just like we've been saying, the ball is in the producer's court right now. So, I mean, obviously hedging is pretty easy up at these levels. But obviously, like, there are wants and needs, and those are all things you kind of got to discuss with your advisor. Like, what are you really looking for? What's the right strategy for you? But obviously the market wants to pay people for their cattle now. So however long that lasts, I mean, there's been a lot of top picking here just because of last week's action. It's hard to deny that was a big reversal, but who knows? I mean, this could last longer. It could last years. You just don't know. The market obviously wants something, and clearly we haven't rationed demand enough. We haven't seen a real setback in price. So, I mean, all's well and good right here. I mean, and we're seeing beef prices continue to edge higher here. I mean, obviously there's going to be some kind of seasonal pullback in the beef. I think that's pretty typical. And then what happens? There's quite a few question marks here, but once again, it's just, taking advantage of the market while it's here and not necessarily trying to outguess it, right, has been kind of the strategy so far. And like you said, on the hog side, we're just kind of sitting here, we're not even trading the tariff headlines anymore. They just kind of came and went. We've got prices back over $1 here in June, getting up, to 103 in July. I mean, I think everybody's pretty optimistic for demand. Carcass is still going higher. Cash tiptoes higher. I mean, it seems like the product markets is just kind of firm. We'd like to see that get a little bit higher here to justify kind of where we're at right now. So there is a little bit of uncertainty here that we're going to be able to hold up as well. We really need to see cash start to pick up here, I think, to kind of prove where the board needs to be. We need to see the index start to rise, and we're just not seeing on the demand front, at least on net sales, not too exciting here this morning. So it just kind of feels like we're limping into the end of the month. Maybe they'll try to dress it up just before that, but overall news is generally firm, but we do have a big premium here. So, once again, something that the producer can take advantage of.
Very good. Appreciate the update. We made it, guys. We got to the end of another great week, which brings us to everybody's most exciting time of the week, and that's Brian's Fun Fact Friday. So what do you got for us, Brian?
Thanks, Dan. Happy Friday, everybody. We made it. Dan, you got more Riz than a bag of Cheez-Its. Or I could have said to you, are you a skibbity toilet? Because you got my heart doing backflips. If anyone has a Gen Z or a Gen Alpha kid or grandkid in the house, they've created their own vocabulary. So Riz is short for charisma, Dan. So you got game on that one. And Skibbity Toilet, you're just really goofy. So you got my heart doing backflips for you. So really hard to figure out these kids these days. They've, as I said, they've created their own vocabulary. So I got a little cheat code for us to help us parents and grandparents through this new thing that we got going here. So here we go. Here's some phrases that our Gen Z, Gen Alpha people are saying. That's giving main character energy. That means someone's acting confidently or dramatically in a cool way. I'm literally dead with a skull emoji. You're laughing hard because no one uses LOL anymore. This is a good one. She ate and left no crumbs. So that means she did it amazing, flawless execution. He's got no riz. He can't flirt. He's awkward and dry. The Lulu is the Solulu. Being delusional is the solution. Lean into it. Manifest it. This is a low key fire. That means quietly amazing. You didn't expect it to be so good. You need to touch grass. It means you're online too long. You need to log off. So then here we go. Here's some insults. You give off NPC energy, saying someone acts robotic or bland. You're built like a fridge. I think we all know what that means. You're weirdly shaped or bulky in an unflattering way, often said jokingly. You're a walking red flag. You're clearly toxic or bad news in relationships, and you have no riz. You can't flirt. You got no game. So if anyone needs that cheat code, I got it on my desk, or I could send it to you online. So welcome to the new world.
Got some riz, Bri.
Thanks, buddy.
Sure.
Thanks.
You are so hip, Bri. I'm telling you, no matter what your kids say.
This market's built like a fridge.
Very good. Just came into the open here. Let's get a quick rundown. July corn down a half, 446.5. July soybeans are down 3.5 at 1048.25. And July Chicago wheat down 3/4 at 533.25. We appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. Doesn't cost you anything to do so, and it'll keep you up to speed on everything that's going on with AgYield. So again, thanks to everybody that supports the show. We're doing this live every day that the markets are open on X, Facebook Live, and YouTube Live at 8:15 Central Time. I appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a great weekend, and we'll talk to you again next week.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.